Hey everyone, welcome back. So today in this video, I'm gonna break down a strategy that's gonna make you a lot of money, especially in this volatile market. Even though we don't really know what's gonna happen, guys, this is a strategy that really reduces your risks and also gives you plenty of upside. You're gonna love this video, so stick around. I'm gonna show you a couple trades I'm doing myself and how to utilize this option strategy. Okay, so if you don't know what options is, it's basically just a way for you to trade stocks without having to outright buy or sell stocks. Okay, so it gives you the right but not the obligation to either sell or buy, into a company. Okay, and in this strategy, I'm going to be talking about specifically selling puts. Okay, so selling put options. And if I had to simplify selling put options into one, just a very brief sentence, I would say it's basically like selling insurance. Okay, so a lot of times people want to buy insurance, okay, for their stocks. So if a stock drops a certain price, then they're going to want to sell it. And especially in this volatile market, a lot of people are buying puts to hedge their portfolio in case the stock continues to drop. And right now, guys, because the stock has dropped so much, it is a great time to get into this insurance business of selling put options. Okay, so I'm going to show you how that works. I'm going to show you why you can make so much money. And lastly, I'm going to show you the really most important fundamental part of selling puts that you got to have to give you an upper edge. Okay, so without further ado, guys, okay, so before I begin, step one, before even starting anything, is you have to get the right brokerage. Okay, so right now, I know a lot of people are using different brokerages, TD Ameritrade, there's Robinhood, there is Schwab, there's so many different brokerages. But what you really have to have, in my opinion, is Interactive Brokers. And guys, I am not sponsored by Interactive Brokers. Although, if you do sign up for Interactive Brokers through my referral link below, you can get up to $1,000 in free stocks. Okay, so the reason why Interactive Brokers is so important, and particularly if you're selling put options, is because they have something called margin trading. Okay, so margin trading, at first glance, it can seem pretty scary, especially if you don't know what it is or if you're just worried about borrowing money. But guys, let me just tell you this right now that a lot of people who are very wealthy definitely use margin trading. Okay, so no one really just simply just uses cash, especially if, for high net worth people. The wealthy people are simply borrowing off of their positions, and so I'm going to show you exactly how that works. Okay, so let's say you get your paycheck, you got $3,000, and you want to invest this first paycheck into the stock market. Okay, so what would you do? Right, you would open a brokerage, you would possibly do some research, find out that Google is a great stock, and maybe buy one share, right? But let me show you a better way, guys. Let me show you a way that you're gonna make a lot more money, and no matter what happens to the stock market in this year, if it continues to drop, if it goes down 10, 15, 20%, you're still gonna make money. Okay, so right now, let's say you got your paycheck, you got $3,000. Okay, we're gonna put it all into hopefully the Interactive Brokers account you just opened up. Okay, and I put in three nifty stocks that I actually believe have strong fundamentals, and I'm going to show you why in a little bit. And I bought $1,000 each in the company. Okay, so right now, right, if you invest in a stock, you put in $3,000. If the company goes up, you're going to make money. If the company goes down, you're going to lose money, and that's simply how the stock market works. Unless you know of some more advanced strategies that Invest with Dan is going to show you. Okay, so let's say you open up Interactive Brokers and you kind of listen to some of the advice, or this is actually, guys, not financial advice. I just need to make sure that I make that clear. But this is some specific strategies that I think could work very well. And it is up to you to do your own research. But take a look at this, right? So let's say you put $3,000 into Interactive Brokers, and with margin, look at this, right? You basically have 50% more money to trade with. Okay, so Interactive Broker says, okay, well, you have $3,000 in the brokerage, and now we're going to allow you to borrow up to another almost $1,500. Okay, so if you just simply times that by 10, okay, so let's see, let's say, we've saved up some money and we have about $30,000. Okay, so right now, okay, so I don't know why this did not update. Let me see if I can, okay. Okay, so by the way, so you can do this without having a portfolio margin account. Okay, so you don't necessarily have to have $100,000. I know a lot of people probably aren't trading, with that much money, but also a lot of people probably are. So either way is completely fine. So right now, if you have $30,000, now I can borrow up to $15,000, guys. That is a lot of money, and this is gonna be extremely handy, especially for this stock option strategy. Okay, guys, so once you have this first nifty tool that's going to just give you such a hefty advantage over everyone else, if you're able to use margin, by the way, and if you do end up using margin, and I'll explain this a little later, the interest rate is at 1.59%. That is insanely low compared to all the other competitors. If you take a look at some of the competitors, you'll notice that you'll know that Interactive Brokers really has the lowest interest rates out there compared to every other brokerage. But do your own research, right? You can figure it out yourself. Right now, Interactive Brokers is at 1.58%. The next lowest one is probably Schwab and Fidelity at almost 8%. Guys, that makes a huge difference if you're trading on margin. Okay, so now normally they also give you just a heads up that margin trading is more risky, and that's because if you're buying call options, if you do end up making bad plays, then yes, it is going to be more risky. But in this strategy, I'm really going to show you how to reduce that risk so that I don't think you need to worry as much about the risk with the margin. Of course, there is still risk, but that's something that is inherent in any kind of investment. Okay. One more thing I want to mention too is I'm going to be trading with Robinhood, but although I show my trades on Robinhood is simply just a tool that I like to use because they have such a clean interface. It really allows you to see what the option would look like, how it would make money, and just it has a nifty graph that works very, very well. And so even though I'm using Robinhood, ultimately, of course, I trade with my Interactive Brokers account because of the margin. Okay, so while you may see some of the trades on Robinhood, that's just kind of how I use to visualize the trade, and then I'll actually go into my Interactive Brokers account and actually execute the trade through Interactive Brokers. Okay, so let me show you how this all works. So once you have your Interactive Brokers account, once you have a little more money to be able to sell put options with using Interactive Brokers, now we're going to take a look at some of the companies, specific companies that I'm selling put options on, and I'm going to show you why. Okay, so the first stock ticker is simply just CLF, so Cleveland Cliffs. It is a company in the mining, iron ore, they did steel. They actually do a lot of different, resources, and a couple quick fundamentals that are really important to look at is the PE ratio, so the price to earnings. It just tells you how much, how expensive a stock is compared to how much a company is actually earning. And anything under 10, I would say is pretty low. So 4.18 as a P ratio is very, very low. Usually I'll also go to Yahoo Finance. I'll take a look at some of the income statements, the balance sheet, all that. And as you can see, CLF, Cleveland Cliffs, their revenue has grown significantly year after year. And this year, if you look at the profit, the EBITDA, they're making a lot of money. So that is just good money that they're making. I also take a look at FinViz real quick, just to take a look at a couple indicators. Usually the RSI. RSI just shows you the relative strength index if it's oversold or bought. So anything under 50, it just means it's oversold. And right now, 26 means that a lot more people are selling. And so that's usually a pretty good indicator that it could be a great time to buy in because everyone else is selling. And I'm sure a lot of stocks right now, a lot of people are selling off in this market sell-off. Okay, so CLF I think is definitely a great company to get in on. Okay, so right now I'm going to show you how this works. So one thing you have to make sure you do whenever you open up your Interactive Brokers account is you do have to open up an option trading account. You don't need level 2, level 3 because those are basically for spreads and more complex options. Luckily, the only option we're using is really simple options. So you only need level 1, and you can do this on any other brokerage as well. You don't necessarily need Interactive Brokers, but I still highly recommend Interactive Brokers because of their margin rates. Okay, so we're going to go into Robinhood. Again, we're just using this as reference. We're going to first sell a put option, and I'm going to go out all the way to January 2023. Okay, now a lot of people immediately would say, why are you selling put options so far out? Well, the reason being is because I want to collect as much premium so that if and when I get assigned, at least I would collect more premium, right? And that would offset some of the cost of the downside, if that makes sense, right? So of course, yes, I can sell put options, a month, a couple months out, but the premium would be much lower, significantly lower. And if I do get assigned, then I would not have collected as much premium. Okay, so just taking a look at like right now, if I do January 2023, if I'm looking at a put option at $15, okay, that pays me a premium of about $323. Okay, so if I open up that trade right now, I'm going to try and break it down for you. Okay, so I collect $320 for opening this trade. Okay, and this is basically, again, an insurance policy for someone else. Okay, so you're basically saying if the stock drops 8% to $15, then the option person on the other side, the buyer of the option, can exercise and sell 100 shares at $15, and you would be forced to buy 100 shares of CLF at $15. Now, you would also get paid a premium of $320 immediately whenever you open up this contract. Okay, so when you open the contract, you get paid $320, and if the stock goes down, you would have to buy CLF at $15. Okay, so let me try and break this down a little further. Okay, so right now, if CLF does go down another 8%, yes, you'll be forced to sell. But because you collected so much premium, guys, in order for you to start basically losing money, the stock would have to go down 27.7%, guys. On a value stock like this, that is insane, right? Like for a company like this that's making so much money, already is pretty cheap, has a very low price earnings ratio. For it to drop 27% is just not very likely. And so that's why, guys, I think this is a home runner. Like you're gonna make $320 off of collateral of $1,180. Okay, so yes, this is where Interactive Brokers comes in. You have to hold the collateral, so you have to have the money on hand, right, to buy the shares that you need to buy in case you get assigned. Okay, so this is where Interactive Brokers comes in handy, because if you do get assigned, if you don't have enough money, then you can simply use margin to buy those positions. And while yes, you pay 1.59%, guys, look at how much money you collected, right? Like you're making almost like 30% off of this trade. Now, are you gonna make more than 30% if the stock goes up even higher? No, right? Like you like if the stock goes up even more, you're not going to be making 40, 50, 60% returns. But guys, and especially in 2022, my advice is don't be greedy. All right, don't be greedy. Be perfectly happy with 30% return. Okay, so that's CLF. Let me show you a couple other stock tickers you can just essentially do the same strategy on. We're going to take a look now at Affirm Holdings. Okay, so AFRM. Okay, so Affirm is a pay later, company that basically allows you to loan money whenever you're making a purchase. And guys, this is a fintech company that has hit the space of that a lot of people are, a lot of the consumer market is really interested in right now. This company is, has a lot of dealings with MasterCard, Visa. Am very bullish on this stock. It is relatively new, but I do, after the more I read about this stock, the more I really have confidence that this stock can double. At the very least, I don't think it's really going to go anywhere because of the consumer demand. Okay, so we don't have a P ratio. This I would say definitely is categorized as growth stock. We're just gonna show different companies, right? Like we're not just gonna do value. We're gonna do growth. We're gonna do other different companies. But as you can see, right, their revenue has been growing consistently. Even though they haven't profited this year, because they're growing at such a healthy rate, and that's why I'm so bullish on the stock. Okay, so if we take a look at, there's probably not going to be a whole lot of indicators yet for Affirm, but let's just take a look. We can see the RSI is at 23.31. So guys, it is very oversold, as with many other stocks. Let's just take a look at some of the options we can get with Affirm. Okay, and one thing I didn't do about CLF is I didn't show you how much premium you can get if you sell puts out even further out. Okay, so we could have gone to 2024, and guys, that is not a bad idea at all, because then you're going to collect even more premium. But the only downside to that is you're going to have to wait, like 2 years for you to realize the entire premium if the stock goes up. Now, one also thing I want to mention too is that you can actually close out your position anytime. Okay, so you don't necessarily have to. Let's say you sell a put out, to 2023. You don't have to wait, okay, till it expires for you to close out the trade, right? You can close out the trade at a profit really anytime before that. Okay, so that's something that I just want to clarify, and in case you had questions about that. Okay, so over here we have Affirm. We're going to sell puts. Again, the insurance policy for people wanting to buy insurance in case the stock goes down. We're going to go out to January 2023. And right now, as you can see, right, I can collect $1,670 off of max loss of $3,830. So that, to me, guys, that is an insane amount of return. Right, that is like what, 40% return. If I get 40% return on Affirm, I would be perfectly happy with that. But let me show you this trade that goes out to January 19, 2024. Okay, so right now, if you open up the trade to 2024, now your return, you collect $2,000 immediately, and then you have a max loss of $3,420. Guys, that is over 50%. That is like 60, maybe like 55-60% return on the stock. Let's say the stock does go down a couple of percentage points. Now one thing to know is you may or may not get assigned, right? A lot of times you actually probably won't get assigned even if the stock dips under 55, because the option holder or the buyer of the option may not want to sell yet because they had to pay so much premium. But really, if you take a look at the chart, the stock would have to fall by almost 40% for you to break even on this trade, right? From the premium you collected, and then based off of how much stock has to go down, the stock would basically have to go down about 40% before you start to lose money on this trade. Okay, so guys, that is insane return for me. Like that is 45, maybe. Sorry, that's like what, I can't really do math, but 60% returns, maybe 55% returns on a company. Guys, for me, I would be so happy with that. If I can make 55% returns, even if it's 2 years, I'll be perfectly happy with that. That's 25%, over 25%, per year. Yeah. So that's Affirm. Let's take a look at Ford stock now. Ford is another company I'm really bullish on because because of their whole EV. They're developing a lot of EV vehicles. In fact, they've rolled out a ton of EV vehicles. I've actually covered this in another one of my videos, so you can check out that video in my channel. But Ford, as you can see, their revenue has grown year to year, pretty well, especially in this year. It's grown. They had a little bit of dip last year, I think, because of the pandemic, but this year they've recovered, and as you can see, their profit margin is very, very healthy. They're making a lot of money. If we take a look right now on FinViz, it is the RSI relative strength index is at 37.38. So that is a relatively good time, I think, because it's oversold. Let's take a look at what Ford would look like if we sold puts on it. Okay, so right now, in fact, I've already started selling puts on a lot of these companies, and they've been doing very well. I started selling puts actually, a couple months ago, and so right now, if I close out those trades, I would actually be making a profit. The way I would close out is I would buy back the contract at a profit. Okay, so right now, if we open the trade. Let's say we go out to 2024 on selling puts for Ford. This is probably something I would consider. So, guys, that's about 30% return on Ford, right? If you're collecting $520 with a max loss of $14.80, that's over 30% return. Yes, if the stock goes down $20, we are selling very, very close to money. You could get a sign, but you probably won't, in my opinion, because the buyer of the puts probably does not want to sell, or the buyer of the put probably does not want to, just let go of his shares just yet because the premium is so high. Guys, if the stock would have to fall down 26% for you to start really losing money. And 30% return on Ford is not bad at all. Not bad for a company that I think is not going to go anywhere. Okay, so this is one of the companies that, in case you're not all into like value or growth stocks, this is a company that has been around for a long time, and I would consider quite safe to invest in. Okay, let me just show you one more, and I'm gonna just kind of wrap up around after this last one. I do have a lot more holdings, a lot more companies I'll discuss in this channel. So if you haven't already, guys, make sure you like and subscribe for more videos. I'm going to be talking about other ideas I have for selling puts. Guys, just in the last 2 days, I've collected over $40,000, $45,000 just selling put options. And so this really is a great way to make good money, especially if you're not too greedy. If you're happy with 40% returns, and with such a large insurance policy, the stock would basically have to move down so much for you to start losing money. Guys, this is a very, very relatively safe way to trade stocks compared to other options you could do. Okay, so taking a look at CWH, guys, our last but not least, Camping World Holdings. Okay, so Camping World Holdings, as you can see, year to year, they've been making great, solid money. They've continued to grow year after year. If you take a look at their profit margins, their EBITDA, they're making good money. This is a company that a lot of people are going to continue to be interested in, right? Like like if you like camping, or if you know someone who likes camping, Camping World Holdings has your back, right? They have all the stuff you need for camping. Now, personally, I'm not a huge fan of camping myself, but that's okay. So long as other people are interested in it, I'm perfectly fine with that. Okay, so let's just take a quick look at the FinViz for CWH. So CWH does look oversold, and they have a lot of great money. The PE ratio is pretty low, so I do think this is a great stock company to get into. Let's take a look at CWH. Okay, so CWH, now we're trading in stock options. So we're going to sell a put. We're going to sell our insurance for CWH. And right now, if we go down to the January 2023 mark, we can collect about $700 off of a risk of about $2,500. So that's very, very good. That's like, I don't know, that's like 30%, something like that, 30%. If you sell put options out to 2024, as you can see, we're collecting $920 off of $2,000. So that's almost $1,000. That's almost 50% profit. Okay, so if I make 50% profit on CWH, I'm very, very happy with that as well. Okay, so and as you can see, we would the stock would have to move down by over 8%, by almost 8% for us to possibly get signed, but we probably won't. And then it would have to go down another 36% for us to basically lose money on this trade, because we would have to account for a premium we collected plus the discounted stock we would get for selling this insurance policy. Okay, guys, I think that's pretty much it for today. I have a lot more videos I would love to make on selling put options. I think there's some really very interesting trades that you can do with selling puts, so long as you're okay with holding a stock. You really have to believe in the stock. You really have to be okay with it. You also have to be okay not being too greedy. If you're okay earning about 25, 30, 40% on these companies and not possibly having a multi-bagger, which is just many more times potential, then this is a great option strategy to make a lot of income. Guys, just on the last 4 trades, I would have collected $3,000 or more just off of having probably around like $7,000-8,000 in cash on hand. So that is a 40% return. Immediately you collect that, and then over time, if the stock doesn't move down too much, then you're going to collect the entire profit. Okay, guys. Well, I hope this content is helpful. If you like this video, make sure you smash that like button. Subscribe if you haven't already. And guys, I'll see you guys around in the next video.
With every star, we are born again. Open your heart, spend this time in your head.